05/13/1968. Is that correct?
Yeah. Who is
Awesome.
this?
Yeah, my name's Morgan. I'm giving you a call about a request that was put in for some life insurance information. I work directly with the state of Michigan here. I was the underwriter assigned to your case to get this information out to you. Real quick here, I just got to verify some information. I have your address as 1017 Boulder Lake Drive, Omaha, Nebraska. Is that correct as well?
Yeah, that's correct.
Great, great. And now, when this information was being filled out, were you looking for yourself or did you have a spouse in mind? What were you looking for exactly?
Well, I was looking for myself, but depends on the price. I may be
Yeah,
looking for my wife.
yeah, of course. And then, who were you looking to protect with this? Did if something were to happen to you, let's say tomorrow, who would be the one picking up the pieces?
I'd probably be my wife.
Your wife, and what is her name?
Mm-hmm. Lorena?
Lorena. Okay.
Mm-hmm.
And then, do you guys have any children at all?
We do.
Okay. So I assume if something were to happen to you, you want to make sure Lorena can take care of your kids and, pay for your final expenses. And I assume you guys have a home as well together. And you want to make sure that she
Okay.
stays in that
Time
home,
out,
right?
Morgan.
Yeah.
Time out, Morgan. Okay. So you're going down the right path. You're
Mm-hmm.
doing perfect. Well, not quite perfect, right? Otherwise, I wouldn't be cutting you off here.
Right.
But you're going down the right path. But instead of assuming, right, we don't want to assume. We can
Okay.
ask a question instead.
Okay.
So, would your wife would some of that money go to help take care of your kids if something were to happen to you,
Okay.
right?
Right.
Would some of that money go to pay for a mortgage if something
Mm-hmm.
were to happen to you, right? You're kind of going down the same path, but you're opening it up to ask a question, because if you're assuming and telling them, then telling is not selling.
Right.
But if you ask the question and get them, the client, to tell you, now they're going to sell themselves. They're going to walk right into it. And on top of that, it builds more credibility for you. Now they understand that you care,
Mm-hmm.
right? So let's go
Right.
back to that part.
Okay. Um, Now, if something were to happen to you tomorrow, Sean, oh, shoot.
That's okay. It's okay to stop and think. You don't have to. So even when you're on the phone with a client,
Mm-hmm.
you can stop right in the middle of a question and think about it, and then go right on with it, right?
Mm-hmm.
It's natural to try to think of a genuine question. So if something were to happen, tomorrow, um, do you think your wife would have enough money to pay for your kids' college? I'm just throwing a question out there, but I'm just trying to give you the tone of how it could be, right?
Okay.
It's okay to think of a genuine question and take extra time to do that in the middle of the question.
Okay. Um, so if something were to happen to you tomorrow, Sean, do you think your wife will be able to um, go out of pocket for your funeral expenses?
Um, well, we have a savings account, but
Mm-hmm.
if she paid for my funeral, we probably wouldn't have a savings account.
Right. Right. And how would that affect you and your uh, her and your children?
Well, she wouldn't have any emergency services. I mean, if an emergency arose, she wouldn't have any money to pay for that if she paid for my funeral.
Right. And would she be able to replenish that savings account as well as she could have with you around? I don't know how I want to word this one. Like,
No, keep going. It's okay. This is why we do this, right? This is
Mhm.
practice, right? By you asking these questions later on, you'll be like, oh, I could have asked a better question, right?
Mhm.
But you only figure that out by asking the question. And
Mhm.
so I would just answer you, yeah, she probably could, but that would take some time. And I
Mhm.
don't know, she wouldn't have enough time to do that. It's kind of why I'm on the phone with you.
Of course. Um, I don't know another question to ask now.
Well, if you can't think of another question, you can always go right into
Okay.
ask a question about the financial inventory,
Yeah, because I know
right?
we were just doing the diving deep stuff before, and yeah, I struggle with that a little bit. But I'll go into the rest of the script here.
Yeah. And you don't have to do it in any certain order, right?
Mhm.
We're talking about this conversation is about him protecting his family and his kids if something were to happen, right? So
Mhm.
maybe a next question, genuine question would be, do you have any type of coverage in place right now? Right? That's one of the questions on the financial inventory,
Okay.
right? And so
Right.
then the next question that you would ask is probably based off of the answer that I'm going to give you, right?
Mhm. Okay. So, do you currently have any life insurance coverage in place right now?
I do through work.
You do through work. Okay.
Mhm.
Great. And what made you start looking into some private coverage for yourself?
Um, well, I just figured, we kind of need something in place because if something were to ever happen to me and I can't go to work, then I'm kind of screwed. And I might as
Of
well get
course.
something while I'm younger.
Of course, yeah. And we love group coverage. We want to take everything we can get through our work because it's free. But, it's always good to have something private in place as well that you have full control over. Because obviously, your work can change your coverage at any time, and they don't even have to let you know that they did so.
Yeah.
So,
So time out,
okay.
Morgan. So
Mm-hmm.
just a better way to address that. I was hoping you were going to address that,
Okay.
right? Because we always want to address the work coverage. Because sometimes clients will feel like, I got enough coverage, I got work coverage. My sister is the same way. And since I'm her brother, she's like, I'm not listening to my brother, right?
Mm-hmm.
But the reality of it is work coverage. I always tell them this: work coverage is great coverage. Don't get me wrong, but we don't count it. Here's
Mm-hmm.
why: it's great because it's cheap. Sometimes you don't even have to pay for it, but it's a group policy, so you don't actually own it. The person you work for does. And so if you quit, you get sick when you can't go to work, or you get fired, get laid off, or retire, then it's kind of like a rental car. You got to give the keys back, and then you're left without any coverage whatsoever. Now, some client or some of your jobs out there will say, "Well, you can take that with you when you retire," because this is the other objection you're going to get.
Mm-hmm.
And I'll tell
Yep.
them you actually can take it with you, but what happens is it goes from a group policy to an individual policy, and the carriers will re rate you based off of your age and your health at that time.
Oh, I
And are
didn't
you
even
going to
know
be
that.
older? Yeah, that's what happens. And then
Okay.
are you going to be older and at six when you retire? Yeah. Do you
Mm-hmm.
think it's going to be more expensive or cheaper when you retire? More expensive, right? So now I just killed the work policy
Mm-hmm.
without making them feel bad because they have a work policy, right? But it just brings the more importance to getting in a policy now that's their own. Does
Mm-hmm.
that make sense?
Yeah, absolutely. Because I always get that objection as well as like, yeah, well, I'm gonna have it when I retire. Like it comes with me, and like I never knew it. They re-rate them at that point, so
Yep, they do
which
because
is
it's a group
huge. Because
policy.
some people
Yeah,
are retiring at 65, and if I'm talking to a 40-year-old, like they're now paying $250 a month or $300 a
yeah.
month for some coverage.
You would
So,
not believe how many calls I get from people that are, or appointments I have from people that are like 64,
mm-hmm.
and they're like, I have a work policy and they told me I could take it with me, and I can, but now my policy is going from $100 a month up to $700 a month.
Yeah.
And I'm like,
Okay.
whoa. So,
Okay.
they're pretty hopeful that I can get them coverage, right?
Mm-hmm.
And I guarantee you it's a pretty easy sale when they're willing to pay $300 a month over the $800 a month that's coming.
Right. Yeah.
So,
Absolutely.
okay, let's jump back into it.
Okay. All right. So here's what I'm going to do, Sean. I'm just going to ask you a couple questions here. As I stated earlier, I was the underwriter assigned your case. I work with about 45 different carriers here in the state of Michigan. I'm one of
Mm-hmm.
3 underwriters that have access to all of those carriers. I'm going to ask you some basic medical questions and financial questions here, and then I'll be able to shop around for you and figure out something that you'll likely get approved for, that'll fit your needs and especially your budget. So let's go ahead and jump into that. Are you a smoker or a non-smoker, Sean?
Non-smoker.
Okay.
So time out,
And
Morgan.
yep.
Time out.
Mm-hmm.
So great job. You led me down the path to help me understand what is coming next,
Mm-hmm.
right? You told me exactly that you're going to ask me some questions, some financial questions, some health questions. So now I know what's coming next, right?
Mm-hmm.
One thing that I would do is not tell them that they're more likely to get approved for. And the reason
Okay.
why is because a lot of times if they know they're going to get approved, that's when they take it away from you,
Yeah, I generally
right?
don't say
Well,
that, but I don't know
well,
why. I don't know. The
it just
pressure of being on the call makes it harder, like for me.
yeah, you're on the hot seat.
Yeah,
It's
I
okay
have
though.
a
It's
bunch of
okay.
people looking at me while I do this.
Well, nobody knows what you look like, so don't
Yeah,
feel bad.
yeah. Okay. Um.
But what I would do instead of that, let me give you a phrase that I would say. I would
Yeah, of
say,
course.
because obviously you know that we have to, and I kind of notice I said obviously,
Mhm.
right? Because if I say obviously, what does that tell you? That everybody else knows, so we're
Mhm.
assuming that you know too. So I would say obviously you know that we have to submit a request to see if the carrier will even approve you, because if they
Mhm.
don't approve you, then chances are we're right back to normal, right? We're right back to square one.
Mhm.
And so we have to submit a request because they need to think about you. It's not the other way around. They're the ones that if you make your first payment, and you don't even have to say a number, if you make that first payment and die the next day, they have to flip the bill for 40,000,
Mhm.
100,000, whatever they're applying for, right? And so they need to make sure that you're an investable person, right? That you're not going to die in 2 weeks or 3 weeks, that you don't have a felony out there from driving recklessly trying to run over people, or you're not running from the cops. You're not a high risk person. So that's why we need to submit the request. Now, I don't go into that much detail, but you guys kind of get the point, right? That's the
Mhm.
kind that we're kind of taking it away from them so that they understand that, oh, we have to submit a request. Otherwise, you're going to get I need to think about it because I know I'm going to get approved. And what do they need to think about? All they're going to think about is the money, right?
Right.
You're going to get can I start this in 3 months? Well, what
Mhm.
happens to you if you die within 3 months, right?
Mhm.
So our whole goal is to get them coverage today, no questions asked. The whole goal is to submit the request, get through the application, and it say approved today, right?
Mhm.
But we have to help them understand that. But we can't just go right out there and say, hey, we're going to submit a request and get you approved today. and this is the amount that is going to come out of your bank account tomorrow. That's going to
Mm-hmm.
work for like 1% out of 100 people, right?
Right.
We have to be nonchalant about this and kind of play their game, because when we're on the appointment, they're not on there expecting to get life insurance today. Most people want a quote,
Mm-hmm.
right? So that's kind of the way that I portray it to them. All right, go
Okay.
ahead, Morgan.
Um, so should we go through the financial inventory?
Sure, start wherever you want.
Okay. Are you a smoker or a non-smoker? Sean,
Non-smoker.
non-smoker. Okay. And just answer yes or no to the following questions. Have you ever had a heart attack, stroke, or TIA?
What's a TIA?
It's like a mini stroke.
No.
Okay. Have you ever had any stents put in place? Do you have diabetes or kidney or liver disease?
No.
Okay. Any thyroid issues, clinical anxiety, or depression?
Uh, yeah, I got depressed when my dog died, but that's about it.
Okay. And then are you currently on any medication for that?
No.
Okay. And do you have any high blood pressure, lupus or
Only
rheumatoid
when my wife yells
arthritis?
at me.
Totally understand. Okay. And then are you currently on any medications right now, Sean?
Uh, yeah, I think I'm on a statin and a high blood pressure medicine.
Okay. Gotcha. And then are you on any, has your doctor prescribed you any medications that you just decided you don't want to take? You haven't filled the script, but they still prescribe them to you?
I was on um, a psychiatric medicine, a few years back, but that was it.
Okay. And do you recall the name of that medicine? And you don't have to say anything.
Oh, I don't remember.
Okay. Alrighty. And then I'm just going to ask you some financial questions here. First one, are you currently working, retired, disabled, or unemployed? Oh.
I'm working.
Working. Okay. And what do you do for work?
I'm a mechanic.
Mechanic. Alrighty.
Mhm.
And then do you currently rent or own your own home?
I own my own home.
Okay. And then what would you say a ballpark estimate of your monthly income is, Sean?
Probably about 6,000 a month.
6,000. And then as far as monthly expenses, just ballpark estimate here, what would you say you pay in monthly expenses? This would be including your mortgage payment. You said you owned your own home, right? I'm sorry.
Yeah.
Okay. Um, so mortgage payment, food, car payments, insurance, phone bills, everything like that.
For my expenses,
Yes.
um, I don't know. My wife does all of that.
Okay. Do you have a ballpark estimate?
Probably about 4 to 5 thousand.
4 to 5,000. Okay.
Mm-hmm.
And then for your mortgage, how much are you paying monthly?
I think I'm not 100% sure because she does all of that. About
Okay.
1,500 a month.
Okay. And is your wife available right now? I don't know. I guess I wouldn't ask
She's
that.
at work right now.
Okay. All right. And then for your home, uh, oh gosh, I'm generally looking at the sheet.
Oh, you're not looking at the sheet.
No.
So what about my wife's money?
Okay. Yeah, how much does your wife make per month?
Well, a better question might be, just to tweak it a little bit, is
Yeah, of
what is
course.
your wife's income,
Okay, yeah.
right? Because
What is your, sorry.
what does your wife make sounds like, you're kind of
Yes.
getting in their business, right?
Yeah, absolutely.
If you say, what is your wife's income? Then it's a professional question that you need to know for the,
Hmm.
you see the difference?
Yeah, absolutely.
Okay. So
Um,
my wife's income, she makes about 3,500 a week, or I mean a
30
month. Sorry.
a month. Okay. So together you guys make around 9,500 every month.
I would say that, yeah.
Okay. All right. Um, and then for your home, how much was the mortgage when you originally? How much do you have left to pay on the mortgage?
I think we have 250,000.
250,000. Okay.
Mm-hmm.
And then, what would you say the current value of your home is right now?
About 420,000.
425,000. So we're looking at about 200,000 of equity.
Uh-huh.
Okay. And now, if something were to happen to you, Sean, I assume you want your wife to and your children to stay in that
Assume
home. Or if something were to happen to you, and uh, I ass- do you want your wife and children to stay in that home?
you're going down the right path, Morgan. I was
Hmm.
waiting for you to do it. You're going exactly where I thought you were going to go. But let's kind of think about a better question, right?
Okay.
So if something were to happen to you and you get hurt, sick, or injured, and you can't go to work and make that mortgage payment,
Hmm.
what would happen? What would your wife do?
Hmm.
Right? Why is that a better question?
Um, because they're gonna start. You know, I guess they would. I don't know.
I'm kind of I'm
They
kind
would.
of planting a seed in his mind,
Yeah,
right? Of
adding a pain
yeah, I never
point.
thought about what if I can't make any money?
Hmm.
I never thought about what if I get in a car accident and I'm laid up in the hospital and I can't go to work,
Hmm.
right? Because if I can't go to work, you can even ask him, if you just curious, if you were got in a bad car accident and you're laid up in the hospital for 4 months, does your boss keep paying you?
Hmm.
I mean, that's a legitimate question, right? You don't even have to, you can even ask that question before the other question.
Hmm.
And then I would say, well, no. Okay. If you got hurt, sick, or injured, and you can't go to work and you didn't make any money, would your wife be able to make that mortgage payment and all the other bills on top of that on her income?
Hmm.
No.
Okay.
Okay. So would you want a policy that would cover the whole mortgage if something were to ever happen to you? Yeah, that
Hmm.
might be a good idea, huh? And I just sold you on getting me a policy.
Hmm.
Does that make sense?
Yeah, absolutely.
Okay. So let's start back there.
Okay. Now, if you were to ever get, hurt, sick, or injured, um, and you weren't able to work, you were out of work for a couple of months, are you gonna continue to get paid by your job?
Yeah, I have disability insurance.
You have disability insurance, okay? And
Do you know what disability
I,
insurance does?
I mean, not really.
Oh, okay. Okay.
I don't know
So,
how much it gives you or anything. Like, I assume it's different for everyone, of
well, that's
course.
why I threw that out there, Morgan,
Yeah,
because if you didn't know, I wanted to make sure that you do know.
yeah,
Okay. Because I'm going to teach you. So,
okay,
what disability insurance does is it pays out anywhere from 60% to 80% of their income for a short amount of time, for 6 months or maybe a year. And
okay,
that's it. Okay. Just so you know. And then a lot of times they'll tell me, well, yeah, my work will pay me because I have disability insurance. And I'll say, oh, okay, so your work's not paying you. It's the insurance company that's going to pay you.
Mm-hmm.
And you know that they only pay 60% of your income, right?
Mm-hmm.
Maybe 80% depending on what you signed up for if you paid the high dollar amount.
Right.
But this is the difference between that and this is this will give you a large lump sum. Oh, okay. Right. And then you
Okay.
just go on to the next question. So that's kind of how I handle that. But
Okay.
that's what it does, just so you know in the future. So
Okay.
go ahead, ask me that again.
Um. Oh my gosh, I'm like blinking. um.
So if you got in a bad
So if you got
accident,
into sorry, what do you want me to ask right now?
if you got into a remember you're asking about you want to ask about the mortgage, right? The
Yeah.
whole point is to find out if he is to get me to tell you that I need some mortgage protection insurance, right?
Uh-huh.
So you
Right.
can, you're asking about the house. You find out that I have about $200,000 worth of equity, right? And so
Mm-hmm.
that equity will go to them only if the house is sold. They can't pull or they refinance the house. That's kind of how it works. If
Mm-hmm.
your equity is in the house, that's money you can't just go out and spend. You either have to refinance the house or sell the house to pull that money out, right? But if you're not making the mortgage payment on the house and the house forecloses, you know how hard it is to pull the equity out? You still can, but it's a pain. It's a real big pain
Mm-hmm.
because now you don't own the house anymore. The bank owns the house,
Mm-hmm.
right? So that's a pain. So knowing this as an agent and you find out they have equity in the house, what would be your next question?
Um. Now, if if you got injured and you guys weren't able to make the mortgage payments, or I don't know.
Because you're laid up in the hospital, you're on the right track. Keep going.
Yeah. If you were laid up in the hospital, how would you guys be making those mortgage payments? Would it be easy to do?
Um, well, probably not if I'm laid up in the hospital. No, because I'm
Okay,
not going to make any money.
right, right. And I assume your wife is gonna want to be in the hospital with you, and she's gonna be working a little bit less as well, right?
Yeah, probably.
Okay. Alrighty, and then just a couple other questions here. Do you guys have any like significant savings?
So hold
You know,
on, hold on. You
sorry.
forgot the main question, right?
Yeah.
So if we were to find something that would cover the mortgage,
Okay.
do you think that would help your family?
Okay. So if we were to find something that would cover your mortgage if any of those events occurred, do you think that would help you and your family?
Yeah, for
Okay.
sure.
All right. And you said your mortgage is around 200,000. Now, I assume you guys, have some other bills as well.
Do
Um,
you guys have any other
do,
expenses
do
or
you
debt?
guys? Yes. I love
And
to say
assuming,
I assume.
yeah. So
um,
when you say I assume, what happens is and you may be right. You may assume that you're right, right?
yeah.
But now you're not advocating on the client's behalf
Right.
because that client now thinks that you're kind of being biased because you're assuming. And you
Okay.
may be right. But as you keep saying assuming, I assume, I assume, I assume, they kind of get a feeling that you're kind of pushing them down a path.
Mm-hmm.
Now, you may already know because that's why you're assuming, but if you just ask the question that you know the answer to, now you're not assuming and you're on their side rather than being apart. Does that make sense?
Yeah.
And
Definitely.
so just ask the question that you already assume the answer to.
Mm-hmm. Now, do you guys? I'm like, I don't know why it's so hard for me because it's so unnatural.
It's unnatural because you're used to doing it the other way. That's the
Yeah.
only reason why. And so
Um.
now we're just challenging your brain a little bit. We're getting you to think. That's okay. Once you get used to this, your sales will go up a
Mm-hmm.
lot,
Yeah.
and you're going to start getting higher ticket sales.
Mm-hmm.
Your commissions will go up as well, and you're going to get a lot less chargebacks, and you're going to get more referrals. Why? Because you actually care about that client. I'm not saying you don't now, but they're going to feel like more that you care. And so they're
Mm-hmm.
going to want to refer you to those people that they're friends with, right? If you do a damn good job for a client and they feel like they've had the best service ever, why would you not go tell your friends about them?
Mm-hmm.
You know what I mean? And so you're going to get a lot of referrals by doing it this way.
Okay.
Now, I'm not saying don't say assume on everything, but you don't want to say it on the majority of things.
Mm-hmm.
Like you can say, I assume the sky is blue, I mean, that's pretty, unless it's absolutely raining out there, right? But that's a different story, right? But as we're trying to help a client, we don't want to assume their situation. We just want to ask what their situation is. And
Mm-hmm.
if I ask the question, hey, why are you asking me all these questions? Then you can even tell them, I really don't want to assume. I want to get to know you so I can figure out the best way to help you.
Okay.
And then people
Yeah.
will understand, oh, she really does care, right?
Okay.
So jump back in, start wherever you want to.
Okay. Um. Oh my gosh.
We were talking about the house, right?
Yeah.
Okay. You're talking about the mortgage.
Mm-hmm. Um.
So if something were to happen to you and you can't go to work and you can't make that mortgage payment, would your wife be able to make the mortgage payment and the other bills on her income?
Mm-hmm.
Start there.
Okay. Now, if something were to happen to you and you can't make the mortgage payment or you can't contribute to the mortgage payment, would your wife be able to make that payment by herself?
She probably would have a hard time.
Okay. Uh,
You can go two places, right?
yeah.
Why would she have a hard time? Or, okay, would you want us to find you coverage enough to pay off the mortgage?
Okay. Um, okay. Would you want us to find you coverage that would pay off that mortgage in full
If something were to ever,
if something were to ever happen to you?
um, yeah, that would be a possibility.
Okay. All right. And then I don't know what I would
And
say from
remember, if
there.
you run out of questions, just ask another question on the financial inventory.
Okay. And do you guys have any, stocks, bonds, significant savings, mutual funds, anything like that?
Anything that acts as life insurance
Anything that acts as
that'll
life
go to a
insurance,
beneficiary when you're done.
401ks, IRAs?
Actually, I have a 401k.
Okay. All right. Do you know how much is in that 401k right now?
I'm not sure. I think about 100,000.
100,000. Okay.
Mm-hmm.
All right. And yeah, at this point, I would just kind of I don't know. I would just look on my underwriting sheet, find a carrier and be like, okay, I found there's this
How
carrier.
how would you lead me to that? How would you go through the process of transitioning into getting me to submit a request to the carrier?
Um, I don't. I'm really struggling today. I don't know. I have no idea.
That's okay. That's why we're on here, right? That's
Yeah.
okay. We're thinking outside the box here, and we're doing it more in depth than what you would do with a client anyways, right?
Mhm.
And the whole purpose is to get you to grow.
Mhm.
So what I would do is I would ask a question. Look, the next step is to see if we can even get you approved, because if we can't get you approved, then you're kind of back to square one. And the
Mhm.
carriers really, really, really are the ones that need to think about you, right? I'm kind
Mhm.
of taking it away. And the reason why is because if you make that first payment and then you die the next day, they got to flip a large bill. And so they got to think about you to make sure that they're willing to invest in you. So if we were to submit a request today and you did get approved, when do you think you would want that coverage to start? I'm assuming you would want it to start today. Now, in this case, I did say assume, right? Because now I want the coverage to start today.
Mhm.
So I kind of led with the question, right? But then I'm telling him, I'm guiding him to start it today, right? So I'm not being rude. I'm not just going to come out and say I assume that you want to start coverage today. No, I created the scenario. We were to submit a request to the carrier today, when would you want the coverage to start? I assume that you would want to start it today, right? Most people do.
Mhm.
You could say something like that, right? Otherwise, you may get them to say, and they may say, well, I'm not going to start it till next week. I'm not going to start it till next month. Now, if they say
Mhm.
next month, there's no point in me even going through the application,
Yeah.
because you can't start a policy unless it's within the next 30 days. But if
Mhm.
they say, well, I'll start it next week, no matter what they say, if I'm going to start it in 2 weeks, if I want to start it today, say, okay, no problem. We'll just start your payment. We'll submit the request. And then if you do get approved, we can have your payment come out on Friday, the blah, 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 blah. Okay?
Okay.
Sure. Now, if he says sure, that's permission to go right into the application, right?
Mhm.
Sure. So let me kind of go through that again, just to make sure we're clear on how that worked.
Right.
So if we were to submit a request today, when would you want to start your policy? I'm assuming you would want to start it today to get coverage today, correct?
Okay.
Yes. Okay, perfect. And then just
Okay.
jump right into the application, right?
Right.
Because it's also giving, by me saying that, I'm also giving you permission to submit a request.
Mhm.
Does that make sense?
Yeah, absolutely.
Okay. So that's kind of how you would lead into the request. Because by this time you have all the information, you have the financial inventory, right? You have or you have an idea of their finances, right? I make over $9,000 for the household. My bills are around 4 to 5,000, top 5,000. So I got $4,000 extra spending money, right? So
Mhm.
I can afford pretty much any policy out there, even an IUL at $1,000 a month if I really wanted to, right?
Mhm.
So so that's out of the question. My health, my drugs that I'm on, so you
Mhm.
know that you can pretty much go anywhere, right?
Mhm.
And so you would start with either an Americo policy,
Right.
or if you're good at IULs, you might go to NLG and shift him to a IUL, right?
Mhm.
And go that route. Does that make
Right.
sense?
Yeah, absolutely.
Okay. Well, good job, Morgan.
Yeah, today's a hard one.
I don't think that was very hard. I think you did a fantastic job. You're just you're accustomed to doing it one way, and now we're kind of thinking outside the box to do it another way to kind of dive deep
Yeah,
when they give us certain answers, right? So good
right.
job.
All right, thank you.
Okay. So does somebody else want to do a role play? We got 15 minutes left. No? No? Crickets? Okay. Is there any questions or concerns that anybody has right now? No? Okay.
I do have one quick question.
Yeah,
Uh, so,
sure.
so you were talking about you know he could afford it, and talking about potentially transitioning into an IUL. How would you kind of
Mhm.
make that transition if you got there?
So if I was towards the end and about to transition into submitting a request to the carrier and I saw that, he has some extra money, I would just ask him a question. You have you may qualify for an IUL. Have you ever heard of an IUL? No, I haven't. Well, it's an index universal life policy. Now I'm going to share some benefits of the IUL with him, and then I'm going to take it away again, right? Because I got to give him a little bit of piece of information to get him excited about it, but then I got to take it away. It's like the cat and the string. Every time you pull the cat chases the string. As soon as you stop pulling the string, what does the cat do? It stops and it looks at the string and it thinks about it. That's what they're going to do. They're going to think about it. But as soon as I start pulling the string, now they can't have it anymore. So they chase it. They want it. But as soon as I stop pulling again, now they're going to stop and look at it and think about it. We don't want them to think about it. We want them to make a decision quick, right? So the way I would transition is I would say, hey, you may qualify for what we call or what's called an IUL. It's an index universal life policy. Have you ever heard of them? No. Okay. This is actually what the wealthy have been using for years. And there's four main things that I always say. So this is what the wealthy have been using for years. Why? Because it's tax-free growth that's indexed with the market. There's no risk of market loss. You can leave a legacy to your family, and it compounds interest on the accumulated value, not the borrowed money that's taken out of it, not the balance of the money that's taken out of it. And I'll say, so in other words, it grows cash value. It covers you for the rest of your life. You can leave a legacy to your family, meaning you can leave a larger amount of money to your family, and it compounds interest. It participates in the gains. It doesn't participate in the losses. Well, what is that about, right? So now if he's asking what's that about, I'm going to dive a little bit deeper into it. And I may run an illustration for him if he's interested in it. Well, chances are they will be, right? And that's what we want them to be. And I'll draw an illustration. I'll get them all excited, and I'll draw it, and I'll reschedule an appointment to draw an illustration. Because when you draw an illustration, it takes probably to explain it the correct way, because some agents don't do it. They just go into the actual values of it and they show the values and then they go that way. But to explain it the correct way, it'll take maybe a half an hour to explain it the correct way. And then you want to go in and fill out the application right away on the same call. So that call will take an hour to an hour and a half. And if we've already been on the phone for 45 minutes, sometimes that's too much. So then what I'll leave them with is a little bit of excitement, right? So let me kind of dive a little bit deep into the IUL. And I'll explain it to them. I'll say, it only participates in the gains. It never participates in the losses. So as an example, I always compare it to a 401k because everybody's familiar with a 401k, right? It's an easy investment to compare it to. And I'll say, you're familiar with the 401k, right? Yes. So if the 401k goes up, everybody's happy, hunky-dory, and living life. But if the market drops below zero, what happens? Cuss words start flying, right? Because that's people's retirement. Think about 2008 when people lost a lot of money, right? I'm plugging stuff in their brain. And I'll say the IUL is different. It participates in the gains. It doesn't participate in the losses. Okay. Now, on top of that, you can leave a legacy to your family. What does that mean? Well, back to the 401k. Let's say you worked your tail end off and you've generated $100,000 in your 401k. If you die, your beneficiary gets the $100,000, but they actually don't. They get $100,000 minus their tax bill. And if you're in a 25% tax bracket, just to give you easy numbers here, now you've just left your beneficiary with $75,000. But your IUL is different. Same scenario. You got $100,000 in your cash value. And if you die, they don't get the $100,000. They actually get the death benefit. The death benefit will always be more than your cash value. So in this case, depending on how we build it for you and design it for you, it may be $150,000, $200,000, $250,000. And that money is tax-free because it's in a life insurance policy. And then they're like, oh, yeah. And then I'll ask them the question, do you think that that could help your family? Yes. Okay. Well, let's do this. I would like to run what we call an illustration for you, and I'll actually share my screen with you. So let's reschedule for sometime tomorrow or the next day and jump online together, and I'll run an illustration for you. And if you think that this fits what your family's goals are, then we'll submit a request to the carrier to see if we can even get you approved. Because this is the best, the first stage. Once it's in place, you're good to go forever. It's just takes a little bit of time to get it set up. You're not going to get approved right away. It sometimes takes a week to 6 weeks to even get you approved. And then they feel comfortable with get online with me, but they already know that I'm going to be sharing my screen with them, and I'm also going to be submitting a request with them. Now, before I do that, then I get 2 numbers from them. And I'll say, okay, this is not like a term policy where you call me up and say, hey, Sean, I need $500,000 worth of coverage. How much is it? It's not like that. This is more along the lines of how you want to contribute to it, like your 401k. Think of it like a 401k on steroids, where you participate in the gains, you never participate in losses, and you never have to pay any taxes on your gains. And if you die, you get to leave a bigger number to your family, and it covers you for the rest of your life. So what I want you to think about is this. Most of my there's no cap on this either. Most of my clients that fund these types of policies, they'll put in $1,000 to $1,500 a month. I have some clients that put in $3,000 a month, $5,000 a month, $10,000 a month. Now, time out. What am I doing? I'm talking about third-party stories, right? Talking about what other people are doing right now. And everybody wants to keep up with the Joneses. Right now, they're not going to say, well, I only put $100 a month in, when most of my clients put in $1,000 to $1,500 a month. Right. And now it's a different perspective. It's not a bill. It's not a bill like a term policy would be. It's more of a contribution like the 401k. I just shifted their mindset, I guess the correct term would be. I just shifted their mindset from now becoming a bill to a contribution to something they want to contribute to that's going to help them for the rest of their life, right? So I need 2 numbers from you. What I want you to think about is over the course of a year, 11 months out of the year, what is the max you would want to contribute to your tax-free retirement? Not to your life insurance policy, to your tax-free retirement, right? I'm shifting the mindset. And then on the flip side of that, 1 month out of the year where the wheels are falling off the car and you got some extra bills that month, what is the minimum you would want to contribute to your tax-free retirement no matter what? And then I zip it. And you'll hear them sit there and talk themselves through it. Wow, I never thought about this. I guess I would have to ask my wife. And I'm not saying anything. And then they're like, well, I could probably do $1,000 a month and then probably $250. Okay, so $1,000 a month for the max and $250 for the minimum? Yes. Now, where did they get that idea from? Right? Where did they get the idea of $1,000 a month? I gave them the idea, right? Because that's what other people are doing. It's funny how it works out that way, but it does. So I'm leading them down a path, right? Because the reality, and I'm just helping them by doing that. Because the reality of it is if I don't, then they're going to say, I want to put in $200 a month. And if they're 50 years old, that's underfunding an IUL. That's not going to do anything for them. Now you have an objection and you have to rebuttal it to get around them to help them understand, well, you need to put a lot more than that in, right? Whereas I can just lead them down a path and kind of show them what the natural path is and help them understand better. And then that way they'll naturally want to do that, right? So then after I get the 2 numbers, I'll just say, okay, well, now I have some homework to do, okay? And I kind of portray that, look, I have to have these numbers so I can do my homework and put something together for you. Now that I have some homework to do here, let's reschedule. And then I look at my schedule, we find a time, we put it on the schedule, and we go from there. Okay. And that's how I transition into an IUL. Okay.
Okay.
Now,
That's great. Thank you.
once you, if you have an IUL and you've never written an IUL, you don't know anything about an IUL, then what you would do is schedule an appointment with me, and you guys have the links to my calendar. And there's a link there that is for assistance with writing policies. You just click on that one, and then you'll know what time I'm available and schedule it in there and make sure your client knows what time it is. And then at the time of our appointment, I'll run the illustration. We'll jump on a Zoom together. I'll share my screen with the client, and we'll run an illustration and we'll submit an application. I'll get 1% of the commission. You get 99%. Okay. Simple as that.